let me start with the opening line. You're more bullish than ever. Why do you say that? And what is the timing of that is interesting when you said that.
Yeah, I mean, look, the full sentence, there it is I'm more bullish than I've ever been about crypto. Okay. And so I'm very specifically talking about crypto. I'm not talking about AI. I'm not talking about the national debt. I'm talking about crypto. And the intro here says a little bit about it, which is simply that I've been building in this space for 11 years, almost 12 actually. And when I had a moment just sort of stepping back, and I actually just came off of, we had almost 1,000 employees in town for a big event. One of my board members called it a revival, but it was a really exciting. And so it's a moment to reflect on kind of where we are. And it's extraordinary. I mean, it's truly extraordinary how far we have come. And so when I look at everything that's been accomplished and the velocity of things that are happening, I'm more bullish than ever. I literally, and I feel like we just keep hitting turning point after turning point after turning point. And so, yeah, I'm excited about it. And I think
that word crypto.
Crypto.
Is it narrow, crypto?
I don't think so. I mean, it's like saying the internet. So crypto is simply the applied cryptography using distributed computing infrastructure for the purpose of providing a new layer for data transactions, compute, and trustworthy data transactions and compute on the internet. That's what crypto is.
So you have a much wider definition of crypto there.
Well, that's what cryptography, applied cryptography on the internet is this.
No wonder you are putting us in that second line. Majority of people have extremely narrow, limited understanding.
I think that's correct.
I'm in that crowd, I guess.
Yeah, I don't know if you are. I've had very long conversations with you, and I don't think that you're in
the crowd.
You're in that crowd. I think part of the challenge is that first, just people tend to have a lot of cognitive dissonance about things, and when they hear something, if they only have a certain amount of attention for something, they sort it very quickly in their mind. Yeah. And so the word crypto, they just sort in their mind, and it's like, oh, this is XYZ, right? Bitcoin, whatever, And so I think as a result, I meet with people who are incredibly intelligent people who have vast domains that they're responsible for, but there's only so much attention that they have for something, and so they'll narrowly look at that. AI wasn't very different that long ago. If you 3 years ago, if you said AI, you'd get blank stares. People would be like, I don't really know what you're talking about. I've been hearing about all this stuff. I don't know if it's ever going to be anything. Literally. How many people here felt that way a few years ago? Yes. Probably almost everyone in the room. So I think, again, I'm a technology practitioner. I've been building, core internet infrastructure now over 30 years. I've seen every generation of internet infrastructure. And when I look at where we are with crypto as an infrastructure and, all of the financial dimensions and everything else, it's extraordinary and it's accelerating. And so I'm very bullish.
And you made a very particular point about a 35-year history of internet. Give us some insight of it's almost heart-pouring the way you wrote about the history of internet. Give us a quick sense of the...
Yeah, sure. I got involved in working on the internet in 1990, so about 34 years ago. And, the protocols that we had, there were some basic protocols, but it was incredibly powerful because you had an open network that anyone could attach a computer to and they'd be on this network. It was not widely available commercially, but there were these different protocols, and they're peer-to-peer decentralized protocols, and it allowed for email, allowed for information sharing, allowed for a number of things. This is pre-web.
Yes.
But it was very clear that this kind of distributed network based on open protocols and open software was going to change the world. And gradually, you saw people building better and better protocols, better and better software and user experiences on top of that. And by 1994, 1995, it was like, wow, this is the web, for example, which is an open, decentralized network for exchange of data and information. No one controls it. There's no government responsible for it, et cetera. emerged. And again, as you look at successively these different waves, it's just this continuous improvement of the protocols themselves, additional protocol layers, all decentralized, all based on open specifications, open source software, and then improving the user experience that you can deliver on top of that. And so I've been part of building internet infrastructure software in every phase of the internet.
So Jeremy said, today, in those progress of internet, very little you saw regulatory intervention. It happened as if regulators didn't care much about it.
Yeah.
Why regulators are so interested now and that causing this friction?
Well, I mean, I think in terms of blockchain and crypto, or
In your post, you talk about the next infrastructure upgrade.
Oh yeah, absolutely.
And the amount of regulatory intervention is just huge.
Well, I think there's a couple things. I think the first is that the Web 1.0, Web 2.0, there was regulatory attention, but it was a kind of laissez-faire, and obviously you saw dramatic changes to society, and you saw these massive centralized platforms scale and accrue enormous power, and now they are looking at that and regulating social, regulating data, regulating obviously around cyber, regulating AI, like all these things. So regulators, non-financial regulators and financial regulators have gotten more focused because it's a bigger part of society. The internet is literally fundamental to the way the entire global political, economic, social systems work.
Sure.
So yeah, they're much more interested. But I think specifically, and I talked about it as you said, when you're talking about economic infrastructure that at the core is going to be utilized for how governance happens in corporations, in society, how value exchange happens, how economic intermediation amongst every party in the world happens. Yeah, people are much more interested in that. And so in some ways, there's sort of a simplistic equation in a regulator's mind. Internet, big, grows fast, huge,
need to
scale,
control.
And then a radical rethink of the economic infrastructure, and you mash those together, and yeah, you're going to be very, very interested in that.
You made an interesting observation in this post that 10% of world money supply will be a stable coin.
Well, I think the best way to think about this is if you think about the internet, basically open networks, open software, decentralized systems have basically absorbed and consumed more and more of functional utilities in the real world. Mm-hmm. So information exchange, communications. But if you take something like video, I did a lot of work in sort of bringing television video to the internet. The amount of viewing hours that people spend with traditional video systems, satellite, terrestrial, cable, it's still the overwhelming vast majority. So I don't know what we're at. We're maybe at 15% or something like that is video that's on the internet.
Now it's
if you take retail, it took us 30 years, and retail, e-commerce is still, I think, around 20% of retail. So 80% is still legacy retail.
Sure.
So if I think about the total addressable market of legal electronic money, the total addressable market of legal electronic money is today over $100 trillion. Now, these changes, whether it be advertising, media, communications, when they change on the internet, it takes 10, 20 years. And even after 10 or 20 years, you're still often talking about single-digit percentages. And so my 10% number is simply to say, when you have a radical improvement in the unit economics and the utility of something, which is what happened with every other change on the internet, and you have a radical change in the unit economics and utility of money, it's not an unreasonable assumption that the internet will consume, and effectively this kind of full reserve digital currency money will consume, potentially 10% of privately intermediated money. Most of that 100 trillion is privately issued, privately intermediated. So I'm sort of saying, hey, I think that this superior form of money could grow to 10%. Again, it could be 10 years, could be 15 years.
And this in the back of one very powerful use case. This is a far more efficient money when it comes to transfer.
Yeah, I mean, in
Is
some
that
ways,
the use case will drive that 10%?
So actually, I don't think so.
What is your?
No, what's interesting is that when I look at stablecoins today, where we are, when I think about the vision we set out to work on 11 years ago, we're basically only right now getting to the achievement of the 1.0 vision. Okay, and the 1.0 vision was that there'd be a protocol layer for money on the internet, for dollars on the internet. That protocol layer would be something that's open and accessible to anyone to connect to, build on, and integrate. In the same way that we had, say, HTTP and the open network for the web. Okay, so we have a protocol layer through things like USDC. That the other belief was that once you had that the marginal cost of storing and moving value on these networks would approach zero. And so you'd get to a point where value exchange in the form of value transmission would effectively be completely commoditized and would approach zero, which is what's happened with every other major form of information, data, communications, et cetera, on the internet. So we're just now there. If you look at third generation blockchains, that includes like these scaling layers on blockchains and third generation blockchains, we're now basically seeing transaction costs at a fraction of a cent, around a penny, and you're seeing throughputs and settlement times that are in fractions of a second to a couple seconds. So we're basically getting there, and so that's really powerful. And so yes, that will cause a lot of growth, but so the philosophy is you're going to have higher velocity money than you've ever had because your marginal cost goes to zero. So you're going to have very high velocity money, which is going to be, because it's higher velocity and because it has the intrinsic characteristics of the internet, it is higher utility. But the big thing, which is getting to answer your question, is that it's actually, you can write code. That basically you have programmable money. And
this program is linked to the linkage of money with the non-currency assets.
It isn't even necessarily that. I mean, for example, if I have an economic arrangement,
Sure.
I want to work for you. You have a company. How do I enter into an economic contract with you? How do I ensure my economic reward? How do I receive that economic reward? Are there conditions that you have on the output of my work?
Sure.
Are there other things? If I'm a business, I'm supplying you something, you're across the planet, how am I going to do that? How am I going to have assurance that the product's delivered? How am I going to have assurance that, or I need to borrow capital in the meantime
Sure.
while that good is moving across a shipping corridor? These are really simple examples, but the point is simply that we have programmable information. We have programmable data. We have the ability to write software to intermediate every facet of interaction in society. We have that on our mobile devices. We have that on the web. We have that through the cloud. We have this. And that just keeps, the programmability is like the fuel of the digital age. Programmable money has never existed. It's never existed. All of the open banking, it's complete BS compared to, it is. I mean, it is not. You want internet scale, globally available. Any developer anywhere in the world can sit down, open up their console, and start writing code to intermediate economic interactions. We are at the very beginning of that. So when I think about 2.0, if we're at 1.0, 2.0 is hyper utility forms of money. And people are going to invent uses of money that are intermediated by smart contracts that we've never imagined. And that's what's going to drive that growth in essentially the supply of digital currency.
So Jeremy, I just don't be a little technical here. Today, the money is fungible because money is disassociated from the underlying transaction. It's just money. When I hold cash, it doesn't say why I'm holding for what purpose. The moment you program the money, the power of fungibility of money goes away?
I don't think so. I mean, I think this gets down to how do we design how do we design this kind of digital cash money? And that is a policy question. It's a prudential supervision question. It is, what is this? What is this? And this is why we believe that prudential supervision by central banks of privately issued stablecoin money is essential so that globally we have a consistent understanding of what, in fact, these underlying instruments are. And if we have that, and you have a consistent application of that all around the world, then you have highly fungible digital currency money, highly fungible, and it can be locked in a contract, it can be released, it can be held, it can be posted, it can be utilized in all these different ways, but the underlying, kind of fully reserved digital cash instrument is fungible.
Sure. Now let me quickly come back to your cost of money transfer. You said that by design, stablecoin will make the cost of money transfer zero or close to zero. Today, many countries claim the retail payment is zero, but in reality is a subsidized infrastructure because the cost is there, but it's not being attributed to customer. Is this, in case of stablecoin, how did you attend that? How do you get to the zero cost, zero construct?
Well, I mean, the key thing is that the transaction settlement, secure, assured transaction finality, all of the computation needed to facilitate all of that, it's outsourced to the public internet. Just like the web outsources the exchange of information to the public internet. Just like we outsource, I call you on I don't know, WhatsApp on a video call. It's a peer-to-peer connection between the two of us that's orchestrated through a piece of software. But we've outsourced all of the actual transmission to the internet, and the cost of data exchange is going to zero, so we get it for free. And so, and because it's peer-to-peer, it's commoditized data. So we're outsourcing.
That's the key point.
What has in the past required massive global companies or huge government-run state monopolies to run infrastructure that does clearing and settlement assurance and so on. We're outsourcing that to the public internet. And there's thousands of companies building new blockchain network infrastructure. It's continuously improving at an accelerating pace. And so we're getting these broadband pipes of transaction assurance, compute, and data integrity, this kind of infrastructure. It's accelerating, and we're outsourcing to that. Everyone can outsource to that. And not just for moving money, any kind of data that needs assurance, any kind of intermediation of that data that you need to have, we can outsource all of that to the public internet.
Okay, got it. Now we have 6 minutes left. Are you bullish on the regulators?
I am. I am absolutely bullish on the regulators.
And are you happy what happened in Paris? You just launched your first Europe MiCA complying stablecoin. Any thoughts?
Yeah, I mean, I'm very excited about it. I had another long post on X about that.
Yes, I did.
Which you can read. But I mean, look, this is a really big deal. You have the European Union, one of the biggest economies in the world. You have the most comprehensive crypto regulation that the world has seen, a huge body of work. And you have the prudential regulators at the kind of EU-wide level. You have very strong central bank regulators in France who have done the work to figure out how do you enable a global stablecoin like USDC to function in the European market. That's a huge deal. And so USDC is now legal electronic money in the European Union. And EURC is also legal electronic money in the European Union.
Don't you think that's a big deal, just to call stablecoin e-money token now?
Yeah, it is a big deal. It's a very big deal.
Because I remember...
Because you need legal certainty. If I'm a corporation, what the hell is this thing? Okay, now I have a way I can put this in my balance sheet. If I'm a financial institution, can I post this as collateral?
Yes.
Well, I don't know what this thing is. It might be offshore, it might be this thing, might have some gold in it. I don't know what the hell this thing is. Now I know what it is, and I know that the Banque de France, the ACPR, is supervising it under rules from the EBA, under rules from the EU, with relationships back to prudential regulators in the US, and it's all being scrutinized and held to a high standard, and that is legal electronic money. That's a big deal.
And I remember for almost 5 to 6 years when stablecoin came, I think most public officers will use what called so-called stablecoin.
So-called. Now we can say legal electronic money.
Absolutely. I think that's a huge progress to my mind.
There still are so-called.
So-called stablecoin. Now, it's good that, and one of the private, I get this private feedback as a regulator, we do get a lot of complaint, that every jurisdiction is asking asset to be localized when it comes to stablecoin. I think there's a bit of unhappiness with that.
Well, look, I mean, this is one of the unique things that we've been able to do and that the European regulators have come up with is this model of a global stablecoin where you have, in this case, we have localized reserves for European holders. Now, it's not that different from banking, okay? If I'm JP Morgan, I'm not JP Morgan, but if I'm JP Morgan and I've got a branch in Japan and I have clients in Japan and they're holding dollars there. Now, the dollar assets themselves might actually just be back in the New York Fed database, because they actually are. There's only one dollar database. It's at the New York Fed, or the T-bill database with the DTCC, or whatever you want to call it. You got these databases over here. But there's a legal encapsulation, which is a prudentially supervised entity that has segregation, has supervision, and it's ring-fenced. And so if something happens legally, that money can't leave Japan. It belongs to the people of Japan. So it exists today.
So you are comfortable with that construct?
I think I am at a high level, and I think there's more work to be done. Actually, it was the Japanese regulators that pioneered this.
I know
over a year ago. So they should get the shout out more than anyone else. But I think they pioneered it. And we've already publicly said we're going to be coming to Japan, and USDC is, I believe, going to be the first major digital dollar in Japan because they've come up with this framework. The other thing that they've come up with, and I think is critical for the regulators in the room, is regulatory equivalence regimes. So basically saying, okay, I've got these e-money tokens prudentially supervised, say, by a supervisor in Europe, and I'm now country X. And how do I treat the same digital token? And so you can still have a licensing regime, but can you basically build this kind of daisy chain of regulatory equivalence and the like, MOUs, other things? So there's a lot that can be done now that we're starting to get this up-leveled.
Now we have a little over a minute left. Just give us a Twitter or X post, which you have not written to us, in next 1 minute. What did it look like?
The next X post?
Yes.
In the next 1 minute. Oh man, that's that's tough. So actually, I'll be brief on this.
Just make it up. Just make it up.
I'll make it up. So actually, if you take the post that I put out there, I make a bunch of assertions about all kinds of things. And each one of those could be another long post. I did actually do one, and I was like, wow, this is a lot of work to do all these. But if you take any one of those, I'll give one, which is that we are really, really close to the UX, the user experience of using crypto infrastructure with legal electronic money, where any person anywhere in the world can onboard as easily as you can onboard into WhatsApp, can have a fully secure direct custody digital wallet, and can directly transact with any counterparty anywhere in the world at a fraction of a cent, at the speed of the internet, and it's going to work, and it's going to be simple. We are right there. We are seeing the products that do this launch every week. There's new products. And so I think 2025 is going to be an extraordinary year for the proliferation of this. And I think almost all of the biggest e-wallets in the world are going to be plugging into this as well.
Fantastic. Before I let you go, what is the new name for stablecoin?
What's the new name for stablecoin? I think we should just talk about digital dollars, digital euros, etc.
Shall we drop the word stablecoin?
I never came up with that, so.
At least you believe.
We originally called USDC a fiat token.
Okay.
So that's
with that optimism, I think we should drop the word stablecoin, call it something else. And best of luck. And I hope your unwritten X post will go to the next Twitter post you're going to make soon. Thank you very much.
Thank you, Sop.